Happy Friday, traders. Okay, so look, the week is ending on a quiet note. So let's just recap some of the main themes in markets and where we're at with those themes. Got the most attention, and that is trending exceptionally well is gold. So, this week we traded through 2,700. We've traded up to a high of 2,750, and almost every day we have made like a new record high with gold. But on Wednesday, something meaningful happened. Wednesday night is that we actually saw a bearish key reversal day in gold. So when you see bearish key reversal days, it suggests that at a minimum we have seen a short-term high. And it also basically says that we've finally found some decent resistance in gold. So above 2750, there are sellers in gold. On the buy side, the support for gold at the moment is around that 2680, 27 even area. So I'd suggest any dips down towards there is where you want to be buying. We are coming up to the weekend, so we have gap risk for Monday. We still have geopolitical concerns in the Middle East. If Israel did strike Iran over the weekend, obviously we'd see a huge gap open for gold on Monday. So look, you cannot be short gold going into the weekend. Something that is interesting about gold is that the retail market actually has not been a big buyer of gold. It's actually the complete opposite. Our client base has actually been net short gold. So they've actually been trying to pick the top here. And that also suggests that that this rally still probably has a lot of legs in it, especially when we do eventually get that retail FOMO come in. Look, the other market that like gold that's been trending well this week is silver. So look, we've traded to 12-year highs on silver, but just like gold found resistance at 2750. Silver has found a brick wall and very good resistance at $35. So I'd suggest that's the line in the sand that obviously silver needs to break for momentum for the next leg higher. Look, anywhere down towards 32.50 for silver is definitely the buy zone for that. Okay, so moving along, the other market that has got a lot of attention this week and the move has been very significant is what's going on with US bond yields. So we've got US 2-year yields, 10-year yields back above 4%, and 10-year yields at 4.2% and above, trading above. And that is what has been driving this US dollar strength, right? So you cannot be selling the US dollar when US bond yields are doing what they're doing. And at the moment, these US bond yields are not backing away. Now, equities have largely ignored this move in US bond yields. Generally when you see a sharp move higher in bond yields, you see equities lower. But Goldman Sachs has come out this week and they've basically said that if there's a line in the sand for US 10-year yields, if they go above 4.3%, that's the level where we'll see that equities react and risk actually roll over. So certainly, look, you need to be paying attention, you need to be watching what's happening with US bond yields, and if they do trade higher, we probably will see more moves in the currency markets and then flow into equity markets as well. Now look, the other big move this week, and just going back to the currency market, has been dollar yen. Dollar yen's traded back through 150, and we've actually seen dollar yen trade as high as 153, and this is on the back of what's happening with US bond yields. The yen is the most sensitive currency, to moves in yields. Okay, so there is a lot of speculation of whether or not the Bank of Japan will intervene, in dollar yen to sort of cap, this spike higher. But look, we have a US election which is less than 2 weeks away now. Donald Trump is favoured to win that election. His policies are, with tariffs, and that policy is very inflationary and will drive US bond yields higher again, which will not be good for the yen. So the feeling is that with the election so close, if the Bank of Japan did intervene, it would just be a waste of time giving the market free money. So at the moment, it seems as if, look, dollar yen will be allowed to trade higher. I certainly would not be shorting dollar yen. If you do get dips back towards 150, that's probably where you'd be looking to buy. And then revisit potential Bank of Japan intervention like after the election. So you want to be staying long dollar yen going into the US presidential election. Okay, look, I hope you have a great end of week trading, and we'll catch back with you next week.